All right. All right. Welcome. Look at us. 1 minute. We're right on time. I believe both platforms are up and running. If you're on a platform and you can't see my screen or hear my voice, let me know. Otherwise, let's get going. Welcome. Happy Tuesday. I mean, we are at the tail end of April already, right? Like, it's insane. My kids, I go drive up on Sunday to pick my daughter up from school. I feel like I was just dropping her off. Only a couple. Only a couple left, Bob. And now I'm picking her up. My son's driving home. We'll have my kids home for the summer. That should be exciting. But man, time is flying, you guys. I cannot believe it. Welcome to the Market Watch Group. Options Foundations 2.0. I'll tell you this. I'm going to be sad as we wrap up options. Not much time left here. But I'm excited for May. And I don't even know what we're doing yet. Somewhere I have some notes, but I want you to be thinking about that. I want you to be thinking about like some of the things you remember us talking about, the experiment where we randomly toss a coin, pick some stocks, right? We're going to do like a trading plan review with a completed plan. We're going to do a 100 trade review session. So we have, I believe it's usually 9 Tuesdays and Thursdays in a month. 9 in a month. Well, let me see. Okay. Yeah. And so in that period of time, sorry, I just need to make sure that everything is working on the other end. Screen sharing. Yeah, it looks like it is. Okay. For now, I'm using Zoom still as my recorder. So it looks like I actually only had one person in there, but now they dropped. So no, there's a couple. All right, yeah. Okay, well, it's good to see everybody. Welcome to the Advanced Combination Spreads application session. What are we going to do today? We're going to talk about butterflies mostly, right? I mean, if you want to go through something else, we can. But let's just dive right into it, right? So disclaimers, as always, education, illustrative purposes only, yada, yada, yada. What are we going to do today? We are going to talk about butterfly spreads and iron condors. We're going to go to the model. We are going to discuss some pitfalls to avoid, and then we're going to summarize this thing, put it to bed, move on to the option Greeks on Thursday, and then a kind of an option Greeks final working session next Tuesday. That will end the month of April. And we will then move on to our, I don't know what we're going to call Discovery Month. I don't know. Give me an idea. All right, you guys, let's dive in. Exploring butterfly spreads and iron condors. Remember what we're doing with the butterfly spread, a neutral strategy that combines a bullish and a bearish spread simultaneously. If my bullish spread is more bullish than my bearish spread is bearish, that's when I have a broken wing, right? And we're looking for it to profit from low market volatility, meaning that we're not looking for this thing to be hugely directional one way or the other. We're looking for it to stay the same. Sorry, real quick check because we've gone a little quiet. Can someone just give me a quick yay for letting me know things are still good? Okay, awesome. Thank you guys. Okay. What's the structure? Buy the wings, sell the guts. These are the advanced spreads because we now have the 3 strike prices. Buy the wings, sell the guts. This is different strikes. Everything is the same expiry, Sandy. Same expiry. Only the calendar spreads have different. So here, these are vertical spreads stacked around in various orders. So we end up with 3 strikes. The definition of an iron condor, iron meaning some calls and some puts. Iron. Condor because it's wider. And in that regard, we're actually combining 2 credit spreads, a bull put and a bear call. And you're creating a large range, expecting it to stay in the middle. Buy 1 of each wings and sell 2 of the guts. That's it. Buy the wings, sell the guts. The wings being at different intervals is what creates broken wing scenarios. Both strategies are designed to capitalize on higher implied volatility, but low market volatility. They're great for markets. I would say more even than striking a balance between risk and reward. I'm saying they're great for markets when you're thinking we may hit some sideways, right? You're thinking, you know what? It may be until we have a stronger proximity, a closer proximity to the Fed's first cut. Well, right now, the first time that has a higher probability than not is September. So, we may go sideways in May, June, July, August. What are you going to do? If it goes sideways for 4 months, covered call, it's going to be okay. You're going to be fine. What are you going to do? You better be ready to do some of this. If that's the market that we have. If we ever want to, right, we can put it on sideways. If it goes directional, we can put another sideways. Right? As long as it doesn't make huge breakout moves. And that's kind of what we're saying is we are expecting to see that less and less. Okay. Whoops, that's the wrong window. Just going to check and see. All right. Questions before we go to the model? I'm going to pop this off. Am I expecting low volatility this summer? I'm expecting lower price volatility because I'm expecting the long-term trend to hold up because we have strong fundamentals in our market, but I'm expecting there to be some short-term consolidation / correction and that we may stay in some kind of range like that. We'll see, right? We'll see. But let's, this is Amazon here. Where did Amazon go, by the way? Still around the same place it was? Interesting. Okay. Let's go through the watch list a little bit to start things off. I'll tell you actually right now, I think Caterpillar is a nice looking one. It does have earnings. So this would be a question of, well, am I willing to hold through earnings on the potential that this thing could gap down against me? Like, let's say back here, 240 down to 223, 17 points. 17 points on 240, 7%. 363 times 0.93, 337. I mean, that would be ugly if it dropped down here on earnings. So I'm not going to suggest someone put this on and hold through earnings, but yeah, things look pretty strong. We may use this as an example simply because it does have the type of setup that we're looking for. Are you in some bullish things? Hopefully, if you did something bullish, you did it in financials, because financials have been doing very strong. You can see AXP is doing well. Bank of America, back here's where the signal came coming out of earnings, doing very well. Citigroup doing very well. But they're not trades now, right? You either are in them already or we're now a spectator. We don't get in. We said that. We got to be ready to do them now or not at all. CMG looks pretty bullish, but it's got earnings. Capital One, bullish, but earnings. Oil still looks kind of reasonable right here. Not as much vol, but interesting. There's Costco, no. GE did well with their earnings. Google looks pretty bullish, but they have earnings in a couple of days. Certainly something that the market's paying attention to. There's Meta, looks good. Earnings coming up. Microsoft, hey, we'd love to see these things try to come back. The problem is this, as we've said already, we're not going to be fooled, right? We're not going to like chase bullishness when our postures dropped 3 straight weeks. A couple of bullish things, yes. Strongly bullish, I am not. I am not. There's Micron trying to bounce. It's an interesting looking one right there. Vol is okay. That might be an interesting one. Netflix, right? There's that gap down on earnings. Like we said, why do we not just slap trades on prior to earnings? Because that. Nvidia trying to have a little. Now remember, I said if it like gives us 2, 3, 4 days in a row, everyone's like, oh look, it's bullish, and then it slows down and rolls over. I told you what I'm going to do. I'm going to speculate to the downside a little bit on that. I think we're heading to 10% in that regard. Give me your thoughts. I mean, honestly, we could even do something like with this right here with the SPY. You know, vol's come down a bit on that one. What did I say already? Conoco. I absolutely forgot to pay attention to my own ramblings. Caterpillar, thank you. Caterpillar, SPY a little bit. Yeah, let's just go build one. Let's just use SPY because we know we have great liquidity there. Let's start with the butterfly. So let's say we think this thing's going to come up and not break out. So I might even kind of think 520 to the upside. So I might try 480, 500, 520 just to start it out. How far out am I going? Right now, I would probably go to May's, right? So let's just go SPY, add simulated trade. We're going to go out to the May, and we're going to go to a butterfly. I'm going to go on the call side, and I'm going to go with 500 in the middle. So if you look at what I just did here, let's get rid of this old calendar spread that's no longer being traded. Now I said I'm going to go all the way up here to 520 and all the way down here to 480. Buy the wings, buy 520, sell the guts, buy the wing. What do I get? I get a triangle. That's pretty wide. Let's give this that's a pretty wide triangle. What day is today? 4/23. Uncheck this. That's where we are now. Yeah, I think I'd actually orient this. Let's go right at the money. So let's go 505 in the middle. 525 on the upside. when I change the two dates in the model, like this date here, you're saying this 4/23, or which date? Is that the one you mean? Oh, okay. So on top and down here. So up top, this is actually your probability range. So as you go forward, you can see there's 100% probability because this day's over. Here, it's saying that there is a 68% chance that tomorrow it's between here and here. Right? 68% chance one day. That's a probability. This is coming from this probability model here. And if you go another day, you can see the more days you go, the broader this is because, yeah, there's a greater chance that it could move in 3 days and in 2 days. So in 3 days, there's a 68% chance it's between here and here. Well, that puts me to that right there. Although I'm glad you brought it up because I want you to notice, where is this probability? It's well in our range right here, right? And then if we get to the 26th, that's Friday. So then what do we get? Saturday, Sunday, Monday. Now by Monday, it looks like this, right? But remember that we have to adjust this. So that is just adjusting probability. This down here is adjusting the purple line. So as I adjust this, this is saying, oh, well, by the time I get to the 29th, right? Now I'm back to where I'm right on top of the probability again. And then we say, oh, okay, now what? Well, now it depends on where we are at the time, but this would help us to kind of understand how that works, right? So that's probability, and you can adjust the range. 1 sigma, 68%, 2 sigma, 95, 3 sigma, 99. I thought it was 98, but 99.7. So there you go. Probability. And let's go back to today. So so the bottom one down here is implementing the price model to start its what if. What if it's 1 day later, 2 days later, 3 days later, etc., 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 right? I actually feel like I might even cut this down in time. I think I might go to the 10th. Huh. I don't know. That definitely got way more expensive. Yeah, I don't love it. I don't love it. I actually feel like where we are, it may still be better to do a calendar spread on this one. Let's go look at Caterpillar. Let's go to Caterpillar. Let's look at something that's a little bit more bullish to neutral. We do have, where's my vol? Okay, high vol. But we do have earnings coming up, but let's take a look. So let's get rid of these two. Out to the maze. Now this one I am thinking a little bit more of a broken wing butterfly. Let's go in a little bit and out less just to start, give us a starting point. Okay, that's not bad, actually. How much room would we want to give this? I think I'd want to be able to give it a little below, but not, maybe not all the way to 340, less than that. 345? 340 is pretty far actually on this one. Let's take a look. Yeah, I would probably even say maybe like just there, 349. Let's go with that. Let's go with 349. Now, we do go theta negative, so we have to be careful with what that means. Steven says, I wouldn't drop below the 50. Okay, let's take a look. Let's see where we see the 50. 50 is around 340, 348, 47, 348. I'm at 349. Yeah, we're about the same place, it seems, right? Okay. If Caterpillar goes bullishly, let's say up around 385, out around May 1st. So we'll kick this out there. And we'll say 385. Yeah, I don't know, man. I don't know why I don't. I don't know if it's that it's not that high of vol, but I feel like, I mean, we're taking about 14 of risk here. We're getting 15, 21. I mean, I guess it's about a 1.5 to 1 reward to risk ratio, but we're really only getting 1 to 1 on this trade. I don't love it. I don't love it. And that's why the model is helpful, right? But there's something about it right now that if I were to do this trade, I think I would be more inclined to go vertical. And I would say 365, 370. Yeah, I mean, we're only getting 1.5. We're getting 1.5 to 1. Honestly, I think I'd have to trade this more directionally. I think I'd have to trade this more directionally tight. So if we look, I bet we have a Heiken Ashi now. Yeah. So rather than give it room, I think that I would come in just under this. That's going to put me at 352 for a stop. That's going to change the dynamic. Not a ton, but a good amount. And realistically, I think you could even aggressively put your stop now that we're here at night. I would even say below today's low, 356. That's a little more aggressive, 356.50. And now all of a sudden you can see this trade takes on a whole different dimension. Right now I'm risking 600 for 14. I'm getting 2.5 to 1, that's a 1.5 to 1 op stock turning into 2.5 to 1. So yeah, you know what? I thought maybe it might be some time components, but this makes more sense. If we're gonna be bullish, I want to fail fast, I want to fail cheap. I don't want to linger in that trade necessarily. From the SPY, now here's the thing. And here's why this you can see the vol is still pretty high here. But if we dial this back and we go in and we look at the VIX, The butterfly here at 21, well, it was never there. Here at 19 versus here at 15, very different. Now, it's come back pretty well. But remember what I said. It's got a long ways to go. Not still long. But if tomorrow things stabilize, and then the next day they kind of like this, and then the next day we like start to go, that's a higher low right there, right? So right now the problem is that on the VIX, I'm back at 15. And you remember what we said? Under 16, I'm willing to do a couple things. A, buy the puts again. So if we get to a point where we're like, ooh, can I buy some puts? Yes. Under 16, the answer is yes. So if this goes up and it starts to stall anywhere between, right now we're at the 50. Right now we're at the 50, and up here is the old low. So that's somewhere between 506 and 512. We stall in that range and roll over. Yeah. And this VIX is sitting 15 to 16, which would be, here's 15 right here, right around that moving average. Same thing. At or above. If it stalls at or above, at that point, I would buy options again because they're cheap again. Interestingly, just in 2 days, you can see how much the vol bled off, but it hasn't bled enough. I'm still a little bit nervous about what we see going on here. Now, that means the next 2 days are going to be very important days to us. However, it also means that if I'm going to do some kind of a sideways trade here, and I know this is for butterflies, but we're not going to force it. So I am going to throw a butterfly on as a trade alert. I feel it coming. Let's go look at SPY. And let's go, whoops. Let's go look at the calendar. If we want to give ourselves some sideways action, here's the SPY. What do I think? I feel like I'd put it around 500. I feel like if it goes up to 520, I could put another one on. So I think I could put it at 500, and that way if it goes up, falls, and lingers, 5 might be a good place. So that's a little bit of a downside bias, right? A little bit of a downside bias. And what am I going to do? I'm going to go 2 weeks, 4 weeks. So I'm going to go the 10th by the 24th. So let's go to the 10th. Let's go at 500 by the 24th. You didn't know you were getting a surprise calendar spread day, but we got to go where the market takes us. Let's draw this back to here. 424. Okay, now you can see where we are. This thing is very much oriented to the downside right now. I might even actually only go, yes, I like that better. 2 weeks, 2.5 weeks, 2 weeks, 3 weeks, 2.5, 3.5. Okay, now let's make this a little bit bigger so we can see it better. So this has us good from 491. Relaxed butterfly. They're very similar. The only difference is Vega, because right now, here's the deal. If this thing drops like we think it's going to, now the problem is if it gets over here to like towards 520, I would say probably around 518. I would put another one of these on at 520. So it would look like this, so that I could connect these. And you might think, oh, but it sinks in the middle. Well, you think it does. But it actually gives me right up until about right there. I have this whole range from 497 to 523. For how long? 2 weeks at most. 2 weeks. That's if I need that. Right now, I just put this thing on. If it just stays where it is, go back to today. Maybe I'd go a little closer if I do this trade. Maybe the 505. Let's go back. Let's go 505 and see. I mean, that's a little bit more like right where we are now, so that if it drops, we wouldn't have to react until I would say, if I want to only lose a couple $100, I'd say like maybe 495 on one side. $519 on the other. 495 by 519. So 495, that's down here. 519, that's up here. Yeah, that makes a lot of sense, actually. I put it on now, if it goes up, but doesn't go all the way and falls back, I'm good. If it drops, I'm good. I only have to do something if it breaks. Now, what would I do? Well, if it breaks down, here's the thing. Remember that if it goes up, I'm going to add another calendar. If it goes down, I'm going to wait, because if it goes down, my vol is pumping in. I'm going to wait for it to drop down here towards like 485. And you might think, oh, you're going to be getting crushed at 485, Scott. Look at that. You're down $500 down there. It's getting demolished. Am I? I would expect my volatility to get back to probably 22% at least. To 16 now. That's 6% increase. What would a 6% increase in implied volatility do? Pump, 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 pump. It just keeps going. Pump it in. Keep pumping. Pump, 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 pump. What is it? What gives us at 6%? And you look down here and we said what? 492? If it dropped down to 492, I'm actually making money. I'm making money down here all the way to, oh no, I'm sorry, 45. We said 45. At 485, I'm breaking even if I get 6% vol. I'm breaking even down here. And now what? Now I have vol pumped in. So what strategy could I do when this is down here and the vol is pumped up? I could put a butterfly. And that butterfly would create a whole nother structure. So I just have this big chunk. Yeah, I kind of like this actually. I think I might alert this one tomorrow. 90 cents, especially if it opens strong one more day and that vol's down a little bit more and we catch this thing. Now what's the opposite side? Well, the other side is, what if it goes up here towards like 517 and we're losing money? Well, then I'm going to put this other trade on and it's going to give me a whole new perspective. Where all of a sudden now between 499 and 527. Well, if I look at 499 to 527, that's down here, very close to the bottom. 527's up here at a new high. I feel like we could make that work. What are your thoughts? I know we said butterflies, but unfortunately the vol dropped so quickly over the last couple of days. This trade, in my opinion, makes more sense. You can see, look how flat this is. It doesn't move very fast. Plenty of upside potential. We wouldn't be able to do this with Caterpillar, right? Because Caterpillar's higher. But I wouldn't trade Caterpillar anyway. We're 3 days from earnings. 3 days away from earnings. Okay. Yeah, plus look, we're in an interesting spot right now. My general premise is this: 16 and below calendar, 16 to 18 up in the air, 18 or above butterfly. That's for short-term SPY trades. short-term SPY trades. Right now, I gotta tell you, I'm not sure. Like I said, if you're bullish, you should have a few bullish things already on that have already capitalized. And now I'm actually thinking to myself, okay, I do like these neutral trades, something like this calendar. I am watching for a lower high and the potential to put on a speculative trade to the downside because I think this market might go ahead and hit that 10% mark. And if it's going to hit that 10% mark, I want something in place. How are the trades you're in now, everybody? Are you tightening stops, taking profits? Are you staying more in cash? Are you protected? And what types of trades would you be willing to put? I mean, of course, in paper trading, anything, you should be willing to take any trade all the time. But from a live perspective, what trades are you willing to take right now, given the current market conditions that we're looking at? I'm curious for sure. Kept cash, trying anything that will make some money. Well, and that's the thing, right? Is I don't want us to be where, like, we don't want that mindset of it's trafficy and I'm going to jerk the wheel, get off the freeway and go speeding around side streets, just trying to save time. And at the end, it was stressful for everyone and you made no time up. I want us to do trades like this where we're like, hey, you know what? Let's just let's see what we can work with. Can I put this trade on, manage it? So I put the trade on now, tomorrow, Thursday. I have all next week to manage that trade. Or, right? So it's here's tomorrow, here's Friday. Then I get Saturday, Sunday. By the time I get to Monday, I'm here and I'm in a great spot. So now what? Now I wait and I see, hey, does it stay where it is? And if it does, by the time it gets to let's say it gets to the second, boom, boom. Well, it's like, hey, I've got pretty decent trade here. Even if it's moved all the way up, let's say it's dropped down here to 502. Well, if it's dropped down here, I've probably gotten at least 1% of volatility. And I'm thinking, hey, look at that. It's Thursday and I'm right here. What would I do? I'd say, well, gosh, let's just give it one more day and start to set a stop on either side. Because if I get to here, now it's Friday. And if I get to Friday, then I get 1, 2, 3. Now by this point, I'm like, now I'm done. Start the trade on a Thursday. I have all next week to adjust if necessary. If I can ride it to the weekend, then I'm going to have this great opportunity to I would say anywhere between 497 and 514. You're making at least $500. And if you're somewhere close to where we are here, making upwards of $900. It's great. There's not a lot of risk to this here. If it does move all the way up here to 520, we can make an adjustment. If it moves all the way down here to 491, we can make an adjustment and keep trying. Looking for credit put spreads. Okay, I like that thought process. Hopefully, now here's the hardest part. When, let's just say, for example, one of our old technology stocks, we decide, ooh, I think I'm going to trade this the other way. I've already dropped a few, but let's well, let me just grab randomly. NVIDIA. Ooh, maybe not NVIDIA. We just don't have anything that looks very bearish on here. We'll run one. Let's go to AMD. Okay, so let's say AMD, they don't have earnings. AMD moves up a little bit here and gets to this point. Without the earnings here, that actually is driving vol down. And then when it drops again, we expect the vol to come back up. So it's tough. I think that as long as it holds up, yes, you're right. Credit put spreads. Well, there are no credit put spreads. Is that what you said? Sorry, let me go back and read the comment. Bear call spreads is your credit spread to the downside. Debit put spreads is the other one. I would say I'm probably looking for debit put spreads. I'm gonna nullify some of the vol and try to catch right something bearishly. If the volatility is low, you can buy puts, but yeah. Very exciting. I'm glad you like it, Sandy. I like them as well. Yeah, you know what? Just to get an option only trade, I think I'm gonna put that out there so you guys get the preview. Tomorrow's alert is gonna be this May 10, May 17 calendar spread, 90-cent debit. I'm trying to think, what would it take for us to get even a better fill price? And maybe I'm greedy. I don't know. If I want 85 cents, stock has to get up to 513. What is a STO high dollar buy to open low with the same expire with puts? That's a bull put spread. So yeah, that is a credit, but that's a bull credit spread. So you're bullish on that. You want it to, it's almost simulating a similar experience as a naked put, right? So that is a bull put spread. There you go. Yeah, bull put spread. If you're a little bit more bullish, that makes sense. I am going to definitely put this out there. I think 90-cent debit makes sense. I think we could get 90. I think that creates a pretty nice little trade here. So yeah, I like it. Well, I like it. Let's just kind of see what this might look like in 2 weeks. Yeah, it's really not a bad looking trade at all, right? Not a bad looking trade at all. All right, questions. I know we didn't do a lot of butterflies. It kind of turned around on us, but hey, we like I said, we go where it takes us. Let me turn this back on. But it's always nice to switch back over, catch a calendar spread, and see what we can do with that. So, quick summary before we wrap this up. And oh, I cannot wait for our Greeks. We'll go through the Greeks. We'll go through our strategy matrix one more time and just kind of prepare ourselves for this summer. Advanced options trading strategy overview. You should definitely be thinking about butterfly spreads and or iron condors to balance reward and risk. Exceedingly frustrating to have a market go sideways on you and all your directional trades are struggling. But it's nice to have something working for you. It's balanced. You can definitely benefit from having limited risk and from generating income, but you also have limited profit potential. These are not home runs. You're just getting on base, knocking someone home, getting on base, knocking someone home. That's a baseball analogy, Sandy, by the way. Do you like baseball over there? What do you guys like? Cricket? Is that more popular? I don't have any cricket analogies. Something about googlies and wickets. I don't know. I like rugby. Okay. Rugby and footy. Australian rules football is fun. Yeah. Yeah. Yeah, I played some rugby. That was a good time. It was exciting. Uh, Tips for success. Balance first and foremost. Balance. Everything is balance. Practice. Scrum. I was in the scrum. I was out. Uh I like to run. Mash a little bit. Scrum, you just get your head tangled up with other people. No, that's no fun. I'm too claustrophobic. Okay. Adapt and evolve to market conditions. That's the most important thing. Right? Same thing here. Stay vigilant by adapting to market conditions, prioritize your risk management. Remember that you are paying commissions on these multi-leg strategies. So just be aware. It's pretty reasonable these days, but we want to understand that. What do I mean when I say balance? Well, right now, our market posture's dropped 3 weeks in a row and is now in the barely in the fours, and we're saying, you know what do I need? I need some sideways. I need some downward. I need some sideways. I need some up, and that gives me balance, right? I need balance in strategy. So we said, hey, I might do some calendar and I might do some butterfly. Those balance each other. So that's what I mean when I say balance. Right now, we're not looking to be aggressively directional because we don't really have an aggressively directional read on the market. We want more of a balanced approach. I hope that makes sense when I say balance. Yeah, it sounds like a platitude, right? You must be balanced, Danielson. Okay. Well, let me get back over here. Questions. Where is everybody today? It's light. Everyone's kind of like the market got a little dicey. Come on. We're better than that as a group. We're better than this. Bob's typing a question, it looks like. I gotta say, I'm excited about these. We actually had someone get frustrated and uh they're like, oh, I'm old. I don't want to talk about multi-legged options. I'm like, well, it's really the Tuesday, Thursday classes are just educational anyways. It's not the meat of what we do, but gosh. I know Bob, right? Because and it's because he said if you see what Bob said, he says the calendar worked out better than butterfly. I only had 2 on Zoom tonight. Calendar and we want to move. So only a few more days, 2 more days of Zoom, and then it's shutting down. There's going to be a few frustrated people, but I feel like I've given plenty of advance notice. Get over on the Discord. Make it happen. Uh, yeah. Oh, you know what? Don't worry about our numbers. We're going to see a big push. We're starting to do some things on our end. Yeah, we've been pretty comfortable just dialing in the service and things like that. So, how do I get that drawing tool set? That drawing tool set is from Zoom, which is what's interesting is I'm going to use one. I have the free version now. I'm going to have to pay the $15 to upgrade it. It's called Epic Pen. But if you like to just draw on your screen and then just erase it, just like, you can use this thing called Epic Pen. Very cool. Uh Thursday, implied volatility in the Greeks. It's going to be amazing. It ties a lot of loose ends, dots some I's, crosses some T's. You're going to want to join me for that. I promise you. Okay, well, listen, look, if it's a core group for a little while we dial in some things and get some different marketing in place before we see numbers fill up, here's what I'm going to tell you. Take advantage of it now while it's a little less formal and a little bit more, a little bit more comfortable because we're going to grow it for sure. More relaxed indeed. Indeed. Although I'm always relaxed. I have a hard time getting worked up about stuff. It's not in my nature. I loved the cocktail hour. Yeah, I think we're gonna see more and more of that. Um, right? Like I think you'll see that as we do see the growth, we're gonna see this Discord. I mean, already look at that. I already fixed the issue, I think. It gets better and better in here. It's going to be a lot of fun. Going to post some trading plan discussions this week. So, all right. Well, listen, I'm going to give you some time back. It's good to see everybody tomorrow morning, midweek check-in. Yeah, we said might get some bullishness. We're getting some bullishness. We also said that bullishness might not last long. So we'll see how long it lasts and what we do next. Have a great night. See you tomorrow morning. And as always, happy trading.